Hello, future cool, best and good CAs. I have been getting a lot of requests from students saying, sir, can you please help us solve this new consolidation question, sir? This sum is not there in ICA study mat, not there in RTP, not there in MTP, not there in model test paper. And also my faculty did not solve this in the class, sir. But when I was going through past exam papers in September 24, main exam of ICA for 14 marks this question came, sir. It was a combination of AS21 consolidation of subsidiary and AS23 consolidation of associates, sir. This is the question. I have taken the suggested answer of September 24 attempt. Can you help us solve this? Now you may be asking, sir, we are very close to the exam. If I'm watching this for an exam where I have 3-4 months left, it's fine, sir. But being so close to the exam, is it okay learning this new sum at this point? I'm only going to borrow from you 15 to 20 minutes. No new concept, something that you already know. So if you know AS21, if you know AS23, go watch those specific classes wherever you have gone. Once you know these two concepts, this sum is easy peasy. Let me repeat, guys, this sum is easy peasy. So if you can give me 15 to 20 minutes of your time, and if you have not seen the sum so far, why take the risk? Learn this and go to exam. If it comes in exam, we will be ready to get those 14 marks, and let us surprise ICA this time before them surprising us. So let's start off with this question, guys. In this question, let me give you an overview first. First, there are three companies. What you guys can do is, to save time, go to September 24 suggested answer, question number 5, and read the entire question if you want to have a head start, because I'm going to save some time of reading the question and I will summarize in my style like how I do it in class. So in this question, basically there's a company called Best Limited. Best, that's the holding. It has a subsidiary called Cool Limited, which is the subsidiary, and that's why the thumbnail for this video has Best and Cool, guys, just to joke around over there. And Best Limited also has an associate company called Good Limited, guys. What has basically happened? They have given me the financial year of 1st April 23 to 31st March 24. Throughout the year, nothing happened, but in the end of the year, on 1st Feb 2024, Best purchased 80% in Cool, making Cool my subsidiary by paying a PC of 14,80,000. And on the last day of the year, thank God, last day means no need all this pre-post drama, Best to purchase 25% in Good, making Good my associate by paying 3,80,000 rupees. That only is there in the first two paragraphs. Let me read it for your satisfaction. 1st Feb, Best got 80% shares of Cool for 1480. 31st March, Best got 25% equity shares of Good for 3,80,000. Clear, guys? So I've established Best is holding, Cool is subsidiary, Good is associate. That's the first thing you do in any question. Mark down who is what. Who is what, guys. Then if you come down, fairly reasonable balance sheet items which you see in every question. I'm not going to read like a school equity shares 30 lakhs, securities premium 20 lakhs. Just glance through all the values. When you're reading in exam, you will read. Something noticeable over here is they have given balance sheet values still here, and then they have also given P&L account values also over here. Usually in consolidation, they give only balance sheet or only P&L. Here they have given both the values trial balance. Then some additional information. The profit and loss account of Cool. What is Cool? Cool is my subsidiary. Showed a credit balance of 30,000 on 1st April. Beginning of the year. Pre-acquisition profits was 30,000. The general balance is brought forward from the previous year. That means my general reserve is fully again pre-acquisition. Next, on 31st March, all the bills payable in Cool Limited balance sheet were acceptance in favor of Best Limited. However, on the date, Best held only 3 lakh of these acceptances in hand, the rest having been endorsed in favor of its creditor. Read it again if you don't understand, but don't worry, I have a diagrammatic explanation of the question. For Best, it has trade receivables 3 lakhs, and they're saying it's not 3 lakhs, it's full amount. So that full amount I'm calling as 3 lakhs plus X. For Cool Limited also, full amount is 3 lakhs plus X. And then they are saying what over here? Look at this. all the bills payable in Cool Limited balance sheet, were acceptance in favor of Best Limited. That means this whole amount, 3 lakh plus X, the entire money of trade payables for Cool is nothing but receivable for Best. That means these two amounts are same. What is it? 3 lakh plus X, 3 lakh plus X. But then what they have given, some component in Best Limited were endorsed to its creditor. We don't know how much that is, but what is left, what is not endorsed is this 3 lakhs. So still what is remaining in both my books, only 3 lakhs and 3 lakhs. So this X is no more my intercompany transaction, because in one company that part is endorsed to somebody else. So what is left is only 3 lakhs. So I will consider intercompany in this question as only 3 lakhs, guys. I'm going to be fast, guys. I'm going to be very fast in this question. Maybe I can even take 30 to 40 minutes to explain this sum, but my goal is I need to finish in 20 minutes. I'm looking at the time. So I will be fast. I hope you're understanding, guys. Next, Best Limited purchase goods costing 5 lakhs from Cool. So holding got goods of 5 lakhs from Cool. Subsidiary sold. So it's going to be an upward transaction basically. Subsidiary sold to holding. Holding, guys, how much they sold? Goods costing. Subsidiary sold to holding. Goods costing 5 lakhs is sold for 6.5 lakhs. The entire goods remain unsold with Best Limited at the end of the balance sheet year. That means what you have to do when you're finding closing stock, you have to do unrealized profits in the books of holding company. In the books of holding company, you will reduce the unrealized stock because they have the stock. And for subsidiary also, you will remove the profit, guys. Now, Best is preparing consolidated financial statements for year ended. Usually, they'll give a question. They will ask you to prepare what to say, either consolidated P&L or balance sheet. Here, they're asking you to prepare specific transactions one by one, 9 points, 14 marks. Let's go one by one. Trade payables consolidated. For consolidation, always we add only holding and subsidiary. Do we add associate, guys? No. Even though a company has associate, when you have a separate question of holding and associate, in AS 23, if you have studied, you would have known that for associate, we don't add its share. We only do the goodwill adjustment. Only if holding is coming with a joint venture. So basically in AS 21, we will add. In AS 27, proportionate consolidation method we will add. In AS 23, equity method we will not add. Sir, I didn't study all these 23 and 27, sir. I'm getting confused. Nothing to worry. Mug up with me, guys. If exam is so close, just mug up with me. In this question, consolidation, holding and subsidiary only we will add. For associate, we will never add. And joint venture, we will add proportionate. Joint venture is not there in this question. I am telling about joint venture because what if they say this is a joint venture, then you have to add joint venture value also. So trade payables, holding plus subsidiary only I will add. Who is holding over here? My holding is Best. Cool is my subsidiary. Associate I will not consider. So look at the trade payables. Trade payables given is 3 lakh 80 plus 4 lakh 10,000. So I will come down over here. 3 lakh 80 plus 4 lakh 10,000 added up. And I told you in the starting also there's 3 lakh intercompany. And whenever you do intercompany, you know holding plus subsidiary minus intercompany I have to do, correct? So holding and subsidiary minus intercompany, 4 lakh 90,000. Easy, 1 mark in my pocket. Super, sir. Next, current assets consolidated. Same way, current assets also, I will just add 9 lakh 65 plus 5 lakh 60. Holding and subsidiary only. I will not take associate. So look at this, 9 lakh 65, 5 lakh 60. Now in trade payables, liability is there, means current asset will have trade receivable. Intercompany, guys, one place trade payables, the other place trade receivables. Therefore, I'm reducing another 3 lakhs and you get 12 lakh 25,000. Current asset done, 2 adjustments done, 2 marks in my pocket. Next one, minority interest. Now, in my consolidation lectures, if you have seen them, mostly you would have seen them because we have about close to 1 lakh views for this consolidation chapter on YouTube. So most of those students only will be watching this, where I would have solved the entire consolidation. There I would have taught you one shortcut. What is minority interest? Whatever is the share in subsidiary which is not held by holding. So here holding is having 80% in subsidiary. So apart from that, remaining 20% of shareholders funds only I will take. What is shareholders funds of subsidiary? 20 lakhs, 2 lakh 20, 84,000, 2 lakh 70. So until this balance of P&L, basically in any question of consolidation, except a few in general question, if you take shareholder funds of subsidiary and multiply with 20% or whatever the minority rate is, you will get minority interest. Look at this over here. Minority interest. All the values, what I just showed you, share capital, SP, general reserve, P&L account, all these you will take from the value of subsidiary. Here, who is my subsidiary? Cool. So from Cool, I will take and apply 20% because that is the share of minority and you will get total, guys. Another 2 marks, swaha, into your books. Next, what they're saying, goodwill or capital reserve. For those students who are following my method, we have step 1, 2, 3, 4. This minority is nothing but your step 4. So step 5 will be goodwill or capital reserve. For goodwill or capital reserve, usually what I will tell, what you pay versus what you got in any business. Here what I paid purchase consideration. So purchase consideration is 14 lakh 80. What I got exactly what is over here. See, minority got this into 20%. Again, I'm repeating. For previous step, minority got this shareholders funds into 20%. So here, I will get for holding nothing but best will get this shareholders value into 80%. That's it. Sir, how are you easily doing this sum? Because there's no other adjustments, no. If there are other adjustments, I will just reduce that respective adjustment value from this reserve wherever relevant and then apply 80%. So here shareholders funds into 80% and okay, so come down over here. But here you have to be careful, guys, because you should take only pre-acquisition profits, only pre-acquisition. Equity share capital, pre. Securities premium, pre, because it's there from beginning of the year. No other details is given. Okay, debentures not over here. General reserve, 84,000. In the question itself, they would have given you general reserve is brought forward from previous year. Therefore, that is also pre. And profit and loss account, 2,70,000 is there. Now, in this 2,70,000, they are saying opening balance is 30,000. So, this alone we have to do an adjustment. So, come down, I will show you what the adjustment is. First, to take all the values. Share capital flat into 80%. SP straight away into 80%. General reserve, because it is opening balance, into 80%. P&L, take the opening balance of 30,000 into 80%. So these are basically balance sheet value, copy paste into 80%. And for P&L opening balance alone, I have taken over here. Sir, what about the other profits? Sir, look at this. In this timeline, the company has earned a profit of how much? 2,70,000. So for the entire 12 months, I have earned 2,70,000. But they have given opening balance is 30,000 which I have anyway taken as pre and I have multiplied into 80%. So what is the remaining profit earned this year, which is 2,40,000, and this 2,40,000 is split between 10 months and 2 months. Why I'm splitting between 10 months and 2 months? Because only 10 months is pre-acquisition and 2 months is going to be my post-acquisition profits. So this 10 months, basically I will take computation 2,40,000 into 10 by 12 into 80%. So my share of pre is this one. My share of pre is this one into 80%, into 10 by 12 into 80%. You will come down over here. So 2,70,000 minus 30,000. 2,40,000 into 10 by 12 into 80%. You will get 1,60,000, guys. I hope you understood. Let me repeat all this again. So the first 5 points is basically copy paste from balance sheet into 80%. P&L opening balance into 80% given in the question. Current year profits, I am removing the opening balance, computing for 10 months and applying 80%. You get 1,60,000. I hope you understood till here. Half the marks are in your pocket. Before I go to point number 5, at this point you have to ask me one question. If you didn't get the doubt, means you don't know consolidation. It's fine because we are close to exams. But someone who learned consolidation with logic and magic, you should ask me over here, sir, in Goodwill capital reserve, we are reducing 2,70,000 minus 30,000 because I'm eliminating I'm eliminating the opening balance and then taking the current year balance and applying 10 by 12. In minority also, why am I applying full 2,70,000 into 20%, sir? This 2,70,000 also, shouldn't I split as pre? Shouldn't I split as post? Shouldn't I again split into 10 months and 2 months? Correct? We have to do that. But for minority, pre or post is the same. Sir, why, sir? Because entire 12 months, first 10 months also they had shares. Last 2 months also they had share. So always I keep telling in class, when it comes to minority interest, there is no concept of pre and post. In our working notes, we used to do pre and post because we anyway compute it for the whole sum. I hope you're getting it. Because for a sum, as part of working notes, we compute pre and post for everybody. We do pre and post for minority. But technically for minority, no need to differentiate pre and post when you're finding the final answer. And that's why here, straightforward, you're getting the answer, guys. Point 4 is done. Next, they're asking goodwill or capital reserve on the date of acquisition of good share. This is nothing but, what to say, associate. Very simple. Again, same concept. What you paid versus what you got. What I paid, 3,80,000 given in the question. What did I get? Shareholders funds. Look at this. I got shareholders funds of associate 10 lakhs. Then what is this? 2,40,000. I don't take debentures. Take general reserve 1,20,000 and take P&L 50. Shareholders funds of associate is these three: 10 lakh, 1,20,000 and 50. Okay, come here. Look at this. I will take 10 lakh, 1,20,000 and 50, guys. 10 lakh, 1,20,000 and 50. Share capital, general reserve and P&L. Shareholders funds. And here my share of associate is only 25%. So straight away apply 25%. So 3,80,000 is what I paid. In return, what I got is 2,50,000, 30,000, 12,500. So I will reduce these three. You will end up with 87,500. Here you have to be careful about one thing. Debentures, they have given in the middle of shareholders funds. So don't make the mistake of taking debentures into shareholders funds. Why have they done that? Intentionally, so that you make mistake. But I am here, so don't worry, guys. Next one. Next, after this, rest of the sum is easy, guys. Next, they're asking profit and loss account consolidated. Now, profit and loss account consolidated is nothing but, I will explain with the answer just to save time. Look at this. P&L account in the question of holding company. P&L of holding is given at 3,26,000. 3,26,000. So I will come down over here and I will write the 3,26,000. And then, we will only add the post-acquisition share. So 2,70,000 minus 30,000. 2,70,000 minus 30, this 2,40,000 only is my post. This is my post, guys. So this is my post of current year. So 2,40,000 is full 12 months post of this year. But technically, 10 months is pre-acquisition. This year, after becoming holding, what I actually earned is only 2 months profit. So basically what I will do, 2,40,000. Current year profit, in that after I became holding only 2 by 12. So 2 by 12 into 80%, guys, into 80%. I hope you're understanding what I'm saying. Let me know in the comments if you've understood or not, guys. Okay, I'm recording all this when you are studying in these last 5 days for the exam. So I need these comments to validate if you're understanding or not. So 2,40,000 is my current year profit. In my current year profit, what is the post acquisition share after becoming holding only 2 months? So in that 2 months into 80% is my share. You will get 32,000, guys. 32,000. So P&L account is also sorted for us. Next, general reserve consolidated. Go above. Go to question. General reserve holding 2,69,000 I will take. Now this 84,000 is fully what, guys? Look at this. They would have given general reserve is brought forward from the previous year. That means general reserve is fully pre-up. That means this full 84,000 is already considered in minority interest 20% and considered over here 80% in what to say, in goodwill computation. No general reserve is earned this year for subsidiary. Therefore, I will not take general reserve of subsidiary, will not be taken 84. Associate anyway I will never take. So general reserve is straight away copy paste 2,69,000 from the question. 2,69,000 copy paste from the question. If I had known this, I would have got 1 mark back then, sir. Last two are very simple. They're asking you P&L items. P&L items, they're asking you what, guys? revenue from operations and cost of material consumed. You should know for consolidation when you go to P&L also, logic is same. I will add only holding and subsidiary values, reduce any intercompany if it is there, because balance sheet if you're doing I have to do for P&L. I will not take associate values for P&L also. Joint venture if it comes I will take it. If it comes I will take it. It's very simple. Like I already told you now, let me just repeat one last time. Some audio issues I'm just repeating for my satisfaction. When it comes to P&L values, especially revenue or anything else, it's usually holding plus subsidiary. Same holding plus subsidiary minus intercompany. We don't take associate, we will take joint venture if it is there. Now if you come over here, sales is 56 lakhs plus 38 lakhs, but I cannot take the full 38 lakhs. I should take only that sales which belongs to me after becoming holding. So 38 lakhs into 2 by 12. Sir, should I multiply into 80 percentage? Guys, in consolidation of subsidiary, I'm again repeating, in consolidation of subsidiary, because you have control in PPE, in all the assets, you take 100% of value. You will apply 80% of value. This value is correct. Sir, I will take subsidiary sale into 2 by 12 into 80%. Only my share I will take if it is, what to say, consolidation of joint venture. AS 27. For consolidation of subsidiary, you should be knowing by now, we will add the full value, and that is why minority is coming now. Because I'm adding full value, what doesn't belong to me is coming in minority. Let me repeat, I will add the full value, but full value doesn't belong to holding. That's why minority comes. In joint venture, I will take proportionate. That's why minority doesn't come over there. So over here, no 80 percentage. I will take only that sale which is earned by me after becoming holding. So I will do 56 lakhs. Come here, yeah, 56 lakhs of holding and subsidiary into 2 by 12, which is basically 2 months. You will add, you will get 6233. Same way for cost of materials consumed. Same way, guys, come over here. 36 lakh 50 is the holding, plus 31 lakh 20 is subsidiary into 20%. Come down over here. Come down, you will get raw materials. 36 lakh 50 is holding, 31 lakh 20 into 2 by 12. My share of subsidiary after I became holding subsidiary 5 lakh 20, you will add this and you will get the final answer, guys. 14 marks in your pocket. Now why am I not taking this stock adjustment? Because I am not finding out inventory value. If they're asking me anywhere inventory value, then I will take it, guys. You can do it, but if you still want to be more accurate, I feel when you're doing this current asset, ICA has not given the answer. I have explained to you in the lines of current asset. But what I will do, if I am the one solving this, in current asset only, inventory will come. So in current asset, if inventory comes, I have to reduce the cost of profit of it. So 1 lakh 50. Again, I will reduce another 1 lakh 50, which is nothing but stock reserve. But that is a separate assumption altogether. Maybe you can give alternate answers to that. But otherwise, we will always go with ICA answer, guys. Some sums we can solve it 2 ways. I can show you many sums like that. So if I was solving this in exam, I would have maybe reduced 1 lakh 50 for stock reserve, but because ICA is not there, I am not doing it, guys. That's the only thing. I hope you have understood this question fully, guys. So this is that AS 21 plus 23 September 24 14 mark sum. Cool, best and good. Learn this and let me know how you feel, guys. Whatever support you need, please keep dropping them in the comments. When you guys have exams, I also have exams, because my work is to sit on WhatsApp, reply on chats. When there are no messages, I will just keep doing some work. And then what is the most popular request, I will just keep making these videos. All the very best, guys. I want you to pass. Thank you. Tata. Bye bye.